People haven't really made much money in SIPs, let's say in last 12 months or so. Are they bad? What are the top 3 themes? Any themes?
Hospitals is the largest theme if you want to invest in where the consumption is happening. Medical expenses are higher than the amount of money they spend on food staples.
Grow in a particular theme might have an ETF as well as index funds. How do I decide ETF is good for me or index funds is good for me? We always say that SIPs work. When do SIPs fail? Where we say SIPs are not good.
I do not come from a camp which says that do SIP and forget about it. I say that you have to do SIP, but you have to also...
Today's guest is Mr. Varun Gupta, CEO of Groww AMC. Varun's personal story has been very unconventional and very inspiring. In this episode, we are going to explore key aspects about SIPs. Are SIPs dead? Should we stop doing SIPs? If not, when should we stop doing SIPs? What should be a good asset allocation? And what are the top 3 to 4 sectors or themes for 2030? It takes a lot of efforts to bring out honest conversations like these. So if you like this, humble request for you to hit the like button and also subscribe to our channel. It will mean a lot to us. With that, enjoy this. Varun, thank you so much for giving me your time. It's a pleasure to be talking to you about a lot of things. I'm excited. I want to move to SIPs. A lot of noise right now in the market.
Yeah.
Market has been sideways, we know, and there has been deeper, sharper correction, and then it has recovered back.
Yeah.
People haven't really made much money in SIPs, let's say in last 12 months or so.
Yeah.
You are a CEO of an AMC now,
Yeah.
right? That's your business now. What do you have to say to people about SIPs? Are they bad? Is it just a short-term pain? What's your view on SIPs?
So there are two ways I will talk about it, right? See, I do not come from a camp which says that do SIP and forget about it.
Right.
I do not come from that camp. I say that you have to do SIP, but you have to also select which fund you are investing in and review your portfolio after every 6 months.
Right.
Right? So let's say you started an SIP in, say, a flexi cap fund about 2 years back. Well, ideally, you should also consult your financial advisor, do your own due diligence, consult, and they will also advise you. But review it after every 6 months. That is the fund doing what it is expected to do? Is the fund house doing what it is expected to do? They are performing as per your expectations. They are doing what they said they will do. If that continues to hold true, somewhere or the other, that fund will do justice to your, your investments. If anything fundamentally change, then you should probably stop your SIP and consider investing in some other funds. And over a period of this time, you will keep on learning. Your advisor will also keep on advising you. For example, multi-asset funds. If you had invested 1 year back in multi-asset funds, the SIPs would have done tremendously well, right? If you would have done also in a pure a BAF kind of a fund, you would have been sitting at a 12-13% kind of a return with controlled volatility.
Right.
Right. So those kind of fund selection also becomes important. What is the second point which I would like to mention? So first is fund selection. Second is you should not stop your SIPs.
Right.
You should not stop investing in the market.
Right.
Right. SIP is just a way to invest in the market. So don't stop investing in the market, especially right now when the markets are down, when the markets have not moved. That is the best time to invest. Right. So don't consider pulling out of the market right now. That is the worst thing which you can do. So invest, continue to invest, but search the fund which you want to invest, consult your financial advisor, understand what is the kind of risk profile you are comfortable with, and then do your asset allocation and then invest.
Varun, that's a very good idea in terms of reviewing the SIPs, let's say every 6 months.
Yeah.
And you said that review it and decide whether the fund is working out for you or not.
Yeah.
My question is, how do you decide? Because let's say in 6 months, okay, I haven't got any returns.
Yeah.
Is returns my criteria to say, no, I'm not getting the performance that I wanted?
Yeah.
Or is it more than the returns?
It's definitely more than the return. So return is just one of the parameters. Of course, it becomes the primary parameter because most people are investing because of that.
Correct.
But I would say it's like maybe 10 to 15% of your decision criteria. See, because I keep doing it continuously, I will tell you that 90% of the time you do not make any change.
Okay.
But what you're looking for is, let's say I invest in a multi-cap fund, right? Is the multi-cap fund true to the label, right? Is it more tilted towards large cap? What I monitor is, I'll give you my example. Is it going more towards large cap? It is going more towards mid cap? Has there been a fundamental change in the philosophy of the fund? Has the fund manager changed? Has the AMC management changed? Are they being stable? Are they doing exactly what they said they will do? Because when I have invested in a fund, I have invested behind a thought process. If they continue with that thought process without any major change, I'm comfortable with that fund, even if the returns are not supreme.
Okay.
Because some or the other time that thought process time will come and I will be able to, do well in that fund. What I have seen after a long time in the market is only a fund or a fund house which keeps changing its philosophy, keep changing, making fundamental changes, keep trying to chase returns, keep trying to different kind of investing. They are not able to do well in their fund. Not saying that momentum investing do not work. It
Sure.
works as a part of your portfolio, but not all your 100% of the portfolio should be in momentum investing. Right? Momentum investing did very well from 22 to 24.
Right.
But right now, momentum investing is in dirt. So you should have some tactical allocation as well. Generally, what I suggest is as a Uber meta level kind of rule. Of course, it varies a lot from investor to investor and from their life needs, and you should consult a financial advisor. I'm very serious about it. Talk to a mutual fund distributor or a financial advisor. But general, the rule of thumb which works for me is about 70% I keep in core equity diversified funds. This is called my core portfolio, equity or hybrid, right?
Okay.
About 10 to 12% I've always kept in commodities. About 5 to 6% I keep in US stocks, largely US stocks or some Hang Seng, depends on what the situation is. And about 10% I keep in my satellite portfolio.
Right.
So where I take thematic bets, right? Like for example, defense, power, like the theme which has very high potential to work in India over the next 5 to 7 years, and there is a structural growth which we are seeing, right? So we are seeing structural growth in defense, in power, in railways, in hospitals, in metals. Metal is more trading, but I have taken some position to understand how the market is. But these are the four sectors. Also, I invest about 10% of my portfolio.
Right.
So at all points of time, my portfolio is balanced.
Right.
Just to give you one idea, while equity has not done well in the last 1 year, right? Nifty 50 returns have been about 9%, but US returns have been 20%.
Correct.
Right? Gold return has been 102%. Silver returns are 289%. Just by having 10 to 12% in commodities and largely in gold, I didn't invest in silver much, about 2-3% in silver. My XRR is right now at 25%, 24.5%.
Right.
Right. So it's also about right asset allocation.
Mm-hmm.
See, what investors end up doing is that, let's say, equity is performing, and equity did very well from 23 to 24 types, and all money they started putting in equity. Don't chase the trend, right? For example, right now, if you invest in commodities in lump sum, I don't know, it might work, but it might be a mistake, right? So if you want to invest in commodities now, if you don't have any exposure, phase it out.
Right.
Right? Do a 10%, 12%, but phase it out, right? So do a right asset allocation, understand your risk return profile, and actually the best way is to consult a financial advisor who will help you do that.
No, brilliant. I love this idea of how you've narrated the asset allocation and the importance of it.
Yeah.
You touched upon the themes, right? And I'm
Yeah.
quite interested in that, and I want
Sure.
to dig deeper in that because I think a lot of us, we understand, okay, I want to build positions in small cap or mid cap or flexi caps. I think
Yeah.
we have fair good understanding of that.
Yeah.
But themes, right? Investing into specific themes.
Yeah.
So let me start with this first of all.
Sure.
Okay. Let's imagine 2030. Okay.
Yeah.
So we're still 4 years away or 5 years away, depending
Yeah.
on how you look at that, because 26 is just started. So, what are the top three themes? If I say, Varun, what's your view that these
Yeah.
three themes,
Yeah.
any themes,
Yeah.
have a structural, as you rightly said, structural growth behind it,
Right.
so that I can go and explore those and see if there are investment opportunities. So, which are those three themes?
Sure. So I'll maybe more than three themes, but I'll tell you our guiding principles around
Sure.
it, right? The first thing which we will look at it is there sufficient tailwind,
Okay.
right, in a sector or in a theme. Tailwind means, is there sufficient customer demand?
Hmm.
Is there operationally, is it doing better?
Mhm.
Is there fundamentally something has changed in that sector which has created a structure in which that industry or that theme can continue growing, right? That is the first and foremost thing which we look at. The second we look at are the underlying constituents of the index. How are they, like, is it over indexed, like one or two stocks, is it over indexed or is it widely distributed? Is it balanced out, right? So these are the 2-3 things we look at. Now this makes us excited about few themes, and let me talk about them, not in any order of priority. The first which I'm very excited about is railways.
Railways. Okay.
Railways, right? Incidentally, we also have the India's only pure play railway PSU index fund.
Right.
But railway is a theme I'm very excited about because government is taking a lot of action about reinventing railways in India, right? There is Vande Bharat trains which have started coming. There are bullet train which is going to get, commissioned. Like, it's commissioned already, but it's going to go live very soon, hopefully, right? And then there is a whole rail stations which are getting completely revamped. There is Kavach system which government has started to prevent the collision, and government is investing a lot of money to reduce the cost of logistics in India. And railway is the least logistics cost in India, right? So railway is a function. Railway is a theme I am very interested. I am very keen. If you want to invest in core railway theme, this is where we have launched this fund for.
Right.
Right. The idea is that you can invest in railway stocks also, but those railway stocks have some functional risk to it, right?
Right. You mean individual stocks?
Individual stocks have
Right.
a lot of other risks, right? Like, say, IRFC has a risk of what can happen to NBFCs in India.
Of course.
Right. But if you want to play railway as a theme, then you invest in railway index. Second, if you ask me, it's more, I would say, power and defense, right? Completely different themes, but at the same level of priority for me.
Right.
Power, because the requirement for electricity is increasing tremendously in India, right? It's a important lever for a lot of sunrise sectors as well. And if that continues to happen, right, the power theme will do, and there is a push towards renewable energy as well.
Right.
Right. So companies which are working, core companies in the power sector, we are very bullish on, and they usually operate across three segments of power, right? Which is the generation of power, transmission, which is like from the place it is generated to transferring it to the place it is going to be used, and distribution. So different companies in different cycle, we have tried to capture all of that in our power ETF. We have the power index fund, power ETF. We're the only ones who have that. Defense also, which I talked about. Defense, I will not touch base on because, people have been talking about it, but it is a long-term growth story. The PSUs, the public, both public and private sector fund companies which have been working in defense, a lot of cleaning of balance sheet has been done. They have an order book for the next few years. India is trying to become indigenous to its power, to its defense needs. So they have huge their order books. That's why it has been created, and they're also becoming net exporters, right? So that's why we are excited about that sector. The third and very important, we are coming up with a fund shortly. Actually, very shortly on that, we have created this index with BSE. Is hospital,
Right.
right? So India as a country has a huge demand for medical needs, right?
Right.
And we have an aging, our population will start aging. Currently, the median age is about 28.8, but slowly it will start moving, towards mid-30s. And when that happens, the need for hospitals will continue to increase. And we are seeing fundamentally the hospital index which we have created and the constituents have done very well, right? So, for example, in 2020, the revenue of this sector was 32,000 crore. Right now, this whole theme of all the 16 stocks is about 60,000 crore. So the revenue has doubled, but profit has become 6x.
Right.
Right. So there are multiple reasons, and if you want to get more technical, we will. But hospital as a theme also we are very excited about because of multiple tailwinds and seeing how the demand is shaping up.
Right. So I think I have follow-up questions on all the themes that you've described. So let's talk about the railways.
Yeah.
So totally understand that almost every budget we have been getting good push on railways, right? One of the concern, or rather I just want to understand whether that's a risk or not, is the valuations and how it has already done so much.
Yeah.
That really is a question out for investors that it's already done so much, and in the last 12 months we have same a lot of correction in that index, even at index level, at even individual stocks level.
Right.
So how do you see that 2 years back, of course 3 years back when it started, this was all going good, but how do we know that this theme will continue to go up, right? So since the valuations were stretched and there has been correction,
good correction,
so how do we really say that there is still steam left in it? And that's the same question for defense as well. Again, massive run up in defense, and again I'm quoting a order book number here for BEL, 1 lakh, more than 1 lakh crore. Look at HEL, they get advance payments in their balance sheet. So totally get it that they are at a very pristine, order book, balance sheet, everything. My concern with these themes, and this is where I want your views, my concern with these themes is the valuations, number one, and number two, they've already run so fast. So do we wait before we decide on any of the themes? Or you think that they are long-term structural themes, therefore, SIP is possibly one way?
See, so you're absolutely right. See, in theme, see, if you're, I worry about valuation if I'm investing for 6 months,
Okay.
right? But if I'm investing for long term, I do not worry about valuation, and
Right.
that is what we try to tell. We do not try to come up with a fund where or any ETF where we expect you to go about and trade, right?
Right. Right.
We only try to come and we try to time as much as possible
Of course.
to launch it at the time when we are comfortable with the valuations, right? So, for example, when we launched defense, defense was already on a high, but it was coming down, right? And everyone was asking, why did you launch it at that time? So, after launching, defense did go down, but it was October last year, October 2024, last to last year. So it has been 1 year, 3 months types. It did go down, but it then again saw a rally. So since then, it has been up by 18%. So I'm not saying in short term returns you will make money, and 18% is not good returns, honestly. From a 1.5 year perspective is okay. But these are all structural themes which will play out in the next 5 to 10 years. Right? Because fundamentally things have changed. Right? Let's talk about railway. There are not sufficient companies which are listed in railways till 2020. Most of the companies IPOs happened only after from 2018 to 2022. So this opportunity itself did not exist. And once this opportunity was identified, of course, there was a lot of rally, and people started investing a lot of money in those stocks. And whenever, and this is a rule of the thumb, right? Whenever you see a lot of sentiment-driven rally, it will going to get correct soon. But once the correction happens, if the structurally there is good bones left in the theme, in the fundamentals of the company, it will continue to grow at a bit slower pace, but will continue to grow.
Right.
That is what we believe is happening in railways. That is what we believe is happening in defense. Defense is seeing good run now, by the way, if you check out.
No, absolutely, absolutely.
Power is something which we are very comfortable with. See, timing, you cannot really time them at any point of time because it depends on when the market, timing has a lot more other factors to it. You can only invest in what you believe in, right? So
Right.
we believe that power is a long-term game. Railways is there, defense is there, and now hospitals, right? Hospitals saw massive correction. We could have launched the fund then, but we were actually not comfortable with the valuations.
Right. Okay.
So just to give you some examples, see, we usually value hospitals in terms of uh, has the operational leverage kicked in, right? Like what is the occupancy rate, what is the RPOB we call it, which is the average revenue per occupied bed, and what is the growth in this matrices, right? So RPOB usually grow in higher single digits, but it was growing at 14-15%, which was very concerning for us,
Right.
right? And because of that, they were seeing a lot of increase in their share prices, right? Most of the stocks. And that you can talk about the details. There was a pent up demand due to COVID, and there was a heavy expansion. But now all of that has corrected. Hospital stocks have corrected, right? And we are now comfortable with the pricing. It's about 60 right now, the P. It will continue to remain high because these are high growing stocks, and they are the very clear sector which will continue to grow, right? Which investors are able to see. So the PE will always remain higher. But we are comfortable now to launch this fund. I am not saying that immediately you will make returns, but I am comfortable launching this fund and offer to our investors, knowing that it is good potential to grow from here onwards for the next 5 to 7 years.
Right. On hospitals, though, I wanted to ask you, I read somewhere, I think there is an index as well. So there's a
Yeah.
hospital index.
Yeah, so we created this index with BSE recently.
Okay.
It is called BSE Hospital Index.
Right.
And we are launching a fund on that very soon.
Okay. So talk me through this BSE hospital index, please.
Yeah.
In terms of, have you done some back testing? What sort of returns we have seen in the last, I don't know, 5, 8, 10 years?
Sure.
What sort of fluctuations or deviations have we seen?
Yeah.
And also the allocation, because let's say top 10 hospitals in that.
Yeah.
Is that tilted towards, I don't know, the likes of the Max and the Fortis, or is it equally distributed?
Sure. So that's a great question. So there are total 16 stocks in that index. There are the big hospitals are Fortis, Apollo, and Max.
Right.
All three of them put together are between 55 to 60% weightage. But then there are a bunch of small hospitals also which have been doing decent. So there is Yatharth, there is Indraprasth, right? There is Rainbow Children Hospital. So a bunch of those hospitals as well. From a market cap perspective, large cap is about 40%. It is 20% is mid cap and about 40% is small cap.
In hospitals, I think one thing that I like is that it is truly India story.
Yeah.
There is no export related, barriers or import related barriers here.
Yeah.
Even for the parts, there's nothing. It's totally disconnected.
Correct.
But from a valuations perspective, you said that it's around at 60 PE, the index,
Correct.
right?
Right.
And there might be some more, room into getting this PE contracted or not. We don't know that,
We
right,
don't
in
know
the
that.
future.
Yeah.
Okay.
At peak, the P was 76.
76. Okay, so it's
Yes.
come down from 76
6
to
to
60 now.
Yeah.
Right. Okay. Are there pharmacies inside this or not?
No, this is
is
pure
separate.
hospital.
This
Pure
is pure
hospital.
hospital.
Pure hospital. So,
Okay.
so see, you raised a very interesting point. Right? This is India's story.
Hmm.
So let me talk about. So India is a kind of a starved country when it comes to medical facilities,
Hmm.
right? Like we have the globally the number of beds per thousand patient is about 3 per thousand people is about 3.4, and India is half of that.
Right.
Right, and so we are still catching up. Right, and there is a lot more headroom for us to grow. Like the amount of money spent per person for medical expenses in India is about $840 per capita, while it is 10 times in China, and yeah, more than 10 times in China, significantly more in US, right? But interestingly, now medical expenses are higher than, if you look at, so we looked at urban expenses and we divided it across category. Urban people who live in urban areas, the spends they have on medical, which is about 5.8%, is higher the amount of money they spend on food staples.
Right.
Right. So it's crazy the kind of money which is being spent, and 75% of this money is being spent in hospitalization.
Right.
Right. There is also pharmacy, there is also insurance and so on, and medical devices, but largely it is about hospitals. So we believe hospitals is the largest theme if you want to invest in the India where the consumption is happening. Right. One of the big themes. Also, government is pushing this, right? Like, so there is Ayushman Bharat scheme. I am sure you are aware of it. Government budget for healthcare was 1 lakh crore. Out of that 1 lakh crore, about close to 10,000 crore was just in Ayushman Bharat.
Right.
Which is like ensuring, giving insurance to a family wherever they want their, whenever they need for medical facilities. And most of this money is flowing into private hospital, right? If you look at Indian customers, they prefer a private hospital versus a government hospital, even in rural areas. So we believe there is a lot of tailwind. There is a lot of customer demand, and this has and hospitals have also figured out there is more disciplined growth now, and not the crazy growth which we saw post COVID, because there was a lot of pent up demand.
Right.
And it gives a more structural, more comfortable for us to launch this fund and offer it to our investors.
Right. Right. Inflation, medical inflation is also very high.
Yeah,
So
medical
that
inflation
should
is high.
also help the earnings.
Medical inflation is high, it's about 13%. Medical tourism is increasing in India, right?
Yeah.
In 2020, there was about 1.8 lakh people who visited India for medical tourism. That has become more than 3 times to 6.6 lakhs as of 2024.
Wow. Okay.
Right? The industry was $7 billion in 2020. It is at $18 billion now. Right? So that is also increasing.
Right.
So we are, it looks like a good growth, and these hospitals are going to get benefited, right? So there, I don't see a reason why these hospitals will not grow. You're also, of course, at stock level, there is considerable amount of risk, depends on how that hospital expand. There can be some management risk, some operational risk. But if you look at hospitals as a sector, then we are comfortable giving this offering to our investors.
Are there any risks you foresee in the hospitals theme?
See, there can be volatility, right? See, because this market has corrected in the short run, there can be some kind of volatility. For example, during COVID, you would assume that hospitals did very well. But during the COVID, the hospital profit actually shrunk the most, right? Because they were involved in a lot of other things. So any disaster like situation like this can exist. But we see from a long-term perspective, these are all noises,
Right.
Because fundamentally, things have started changing in this sector. Good companies have found out their operational leverage. See, just to understand operation, varies a lot at a hospital level, but just at uber macro level, right? For 60 to 70% of a cost of a hospital chain is fixed cost, right?
Absolutely.
Infrastructure, you have hired people, and that is what the cost is. They're able to recover this cost if their occupancy rate is between 30 to 40%.
Oh, really?
That's all.
Even at that low level?
Even at that low levels.
Okay.
Right? Now, that has started happening in most of the established hospital branches. Only in a new hospital, it takes some time. And then the second thing which you look at is ARPOB, which is average revenue per occupied bed. That has also been increasing steadily across all good hospital chains. It was increasing double digit, and that's why the rally in hospital stocks. But now it has come down. It is increasing steadily at 6 to 8%, which is the level we are comfortable with. Right now, it looks disciplined. It looks okay, reasonable. There is no some deviation there. So it looks like okay, this chains will do good. There is a good development. There is a lot of expansion these hospital chains are doing. So we are more comfortable launching hospital because of these things, which we are seeing as a fundamental changes.
Right. Okay. Okay. So you talked about three sectors.
Yeah.
You talked about railways,
Yeah.
power and defense,
Yeah.
and then
Then
hospitals.
hospitals.
Any other sector that you guys have your eyes on?
So we have launched funds in EV.
EV. Okay.
Internet as a theme we are very bullish on.
Right.
So we have launched an internet fund as well.
Mm-hmm.
We will launch more funds where we believe like REIT InvIT is something we are seeing a good potential for a FD plus plus kind of return.
Right.
Right. So there are good themes available, and we are constantly on a lookout for those themes.
Yeah. Brilliant. No, that this is really good.
Yeah.
Varun, another question I wanted to ask you is on ETFs versus index funds.
Yeah.
So, I mean, like for example, Groww in a particular theme, let's say defense, might have an ETF as well as index funds.
Yes.
You have both the offerings.
Yes.
How do I decide as an investor that ETF is good for me or index funds is good for me?
Yeah. See, we leave it to the investor and on their comfort, right? See, the way we look at it, because we are very close to our customers and investors, is that everyone has very different need state and very different comfort zones, right? So if you're comfortable holding your units in demand, and you want to trade, you want to look at what is the price point you are entering, what is the price point you want to exit at, then ETF basically makes sense for you. But if you want to if you want to invest for long term and you want to be disciplined about your investing, then you should go via index fund or ETF FOF route.
Right.
To give you one example, I invest in gold, right?
Mm-hmm.
Silver, I buy it as an ETF because silver is more of a trading and I want to exit and enter at the right price point. But gold, I always buy it as a mutual fund.
Right.
Because gold I am buying for 5 to 10 years, right? That is basically what suits me, what kind of discipline I want to create. Both are same products. There is no disadvantage or advantage you get in one product versus the other. It's just that you get a bit more flexibility in ETF. Also, if you're consulting your financial advisor, he will mostly guide you to be more disciplined, and that's why invest in an index fund route is basically exactly the same. Whatever
Right.
is more comfortable for you.
So tactically, if you want to take exposure,
Yeah.
then maybe ETFs are better.
Correct.
And it's more for active investors who are like
Active.
transacting a lot
Correct.
versus some sort of passive investments that are going through index funds.
Correct.
I see. Okay. What about SIPs and lump sum investment? I think that also is a question. So, for
Yeah.
example, if I were to invest in any of the themes that you said, either
Yeah.
defense or
Yeah.
Hospitals or whatever,
Yeah.
how do I decide whether should I go SIP route or shall I take lump sum route?
So that is again very person to person dependent. See, if you are comfortable with the risk return, so understand the index, understand the theme well. If you're comfortable with the current fundamentals of the theme, you can take a lump sum route as well. The most safest way is to do a SIP, right, over a period of time. But like because the theme will play out over a certain period of time, try to finish as much as you want to invest over a shorter period of time. Let's say a 1 year period, right? So that is one way to take exposure in that theme, because anyways you are investing and then waiting for 5 year period zone, right? Then it does not matter whether you're doing via SIP or lump sum,
Right.
right? But again, always with a caveat, consult your financial advisor. They will basically on your need state, on your risk return, on your goals, they will be the best judge for you, because it varies very drastically from one investor to another.
Okay, understood. That's very good. What about mistakes? I think a lot of people make mistakes in doing, let's say, SIPs.
Yeah.
Okay. What would you call the top 3 mistakes in SIPs?
See, the biggest mistake, which I believe, and somewhere I think we have also been at fault as an industry, is to do an SIP and forget about it.
Right.
Right? That is not the way to do. You have to look at the fund you are investing in. You have to understand the AMC you are investing in. You have to understand, are they doing right by what they suggested they will do, right? Let's say you're investing in a small cap fund, right? And a small cap fund has a 50% large cap portfolio.
Right.
So maybe it is good in the term when there is lesser volatility in the market, and it will cover your your drawdowns. But when the rally in small cap comes, you will not get benefited by it. Right. So you want to invest in true to the label funds.
Right.
Invest in a fund which is true to the label for small cap, which is true to the label for multi cap. Right. So that is what you should keep on understanding. That is the biggest, I think, you should do. Analyze your portfolio, consult with your financial advisor, have a honest conversation with them after every 6 months, not just driven by returns, but also driven by what is happening in that fund.
Right.
The second is, of course, if you have done that well, there is no reason for you to stop investing.
Okay.
Right. So continuously keep on investing. Most of us are salaried, so you will have the SIP is also designed for salaried people. Keep on investing in the market as and when you have excess money, or keep running your SIP. The third is, don't be a momentum chaser.
Right.
Right? Always see, many investors look in the look in the hindsight and try to invest. What we have realized is that, actually, this is my personal opinion. See, there is a lot of liquidity in the market, especially say in the US market. Whatever happens, so a new trend comes, or money starts flowing there very strongly, right? AI was a theme, and all the money started flowing to AI, and AI companies just ballooned out of the comfort zone for a lot of investors, right? Blockchain was a theme, so Bitcoin, the money started flowing, and now Bitcoin is crashing. AI companies are is expected that might happen soon, because they have to now deliver on returns, right? That valuations become multi-billion dollars, ahead of the curve, right? You valuations also have to always have to be in line with the earnings. Now, I believe similar thing is possibly happening in silver, right? While money is going in that stock, there is a lot of speculation which is there. So, that is where the money has started going. Not saying that silver might not grow, but there is a lot of money riding just to chase that momentum.
Right.
So, for long-term wealth creation, don't be a momentum chaser.
Right.
That is what I believe. So, these are the three mistakes broadly, I believe, which investors should do. If you want to be a momentum chaser, do it gradually, right? You have to have a lot of discipline.
Or maybe reduce the allocation or exposure to that momentum theme
Yeah.
or whatever you're chasing.
Yeah.
5%, 10%,
Yeah.
whatever, but don't like go
Don't
50%.
over-index, yeah.
Exactly.
And the fourth is, understand what kind of a person you are. Like,
Right.
you are you a DIY investor, or you need advice?
Right.
Right? About 10% of the investors, I believe, are good DIY investors, where they can manage their emotions. See, when you're managing your own money, there's a lot of emotions involved, right? 10% down is, so you're like, oh my God, should I exit now? And if you have an advisor who can guide you better, then that possibly helps you, who is a little dispassionate about your money and can give you more objective advice.
Right. Right. And also, I want to understand your views on when do SIPs fail? We always say that SIPs work,
Yeah.
right? For long term, if you invest.
Yeah.
Are there any instances where we say, SIPs are not good? Is there any scenario that you
Yeah.
can think of?
I will repeat the same thing again, right? Is the first and foremost point. Just don't do SIP and forget about it.
Okay.
That is, I don't agree with that thing at all. And I have seen people doing, there are funds who have done well in 2018. Then there are fundamentally things have changed in the fund house. Things have changed in the scheme. But people are continuing to do SIP, hoping that sometime the fund will recover. It can recover, but why are you taking that risk right now? Depending on that, right? See, AMCs at the end of the day are professionally managed companies, right? You have to understand what is happening in that company. So though that is something which I am, unfortunately, I'm lack of any better words, I'm pained by it, right? Like, investors should know that what has changed, and they should like be aware or consult an advisor, and then decide when I want to stop an SIP. Stop SIP, maybe don't withdraw, and then observe it over a period of time, and then redeem your investment if they are not still not nothing much has changed in the fund house or in the scheme. That is the time when SIP fails.
Right.
So you will hear a lot of stories where people say, okay, in 22 years, we have created so much returns. And there are, for every example where they have created wealth in 20 years, there is always another fund which has not done well, which has gone down the drain. So you have to keep on understanding what is the fund doing, what is the risk return profile of the fund. See, investing is easy, but it's not blind, right?
Yeah.
You cannot be saying that just doing SIP is okay, right? You have to monitor, you have to consult the advisor, and then you have to rebalance your portfolio. Most times you will not end up doing it, because fundamentally changes do not happen that fast. But whenever the change has happened, it has the possibility of affecting your portfolio very negatively, and I have seen that happening in customers, in investors' portfolio.
Right. That was really good, Varun. And I think that gives me a perspective that don't blindly do SIPs.
Yeah.
Understand where you're doing it. And
Yeah.
if you feel that your fund is not delivering what they were supposed to deliver,
Yeah.
not just returns, but beyond the returns, maybe the portfolio allocation.
Yeah. True to the label.
Yeah, true to the label.
You're looking at why have you invested. Don't don't just go behind a fund because they're giving returns.
Right.
Understand the philosophy. Do you believe the philosophy might work? If you don't have time, then again, go to a financial advisor. He will explain it to you.
I think this was very, very insightful. So thank you for that, Varun. I also want to ask you personally, what's been your biggest success in investing that you would say, this I've got it, absolutely perfectly fine, and I am very proud of it? No, you're being humble, I think.
See, I honestly think I got lucky.
Okay.
See, I always just followed where my heart took me, right? Like I didn't follow a conventional path to in my career, right? I was always like doing a startup and taking a lot of risk, and that is what I was driven by, right? Creating something new, solving a problem, and luckily it has worked out for me. I have a lot of friends who followed the same path, but they got unlucky, or they are still in the journey of where they can be. So I believe investing in myself helped me to generate the kind of wealth which I aspired to do. If you are able to do that, then that's great. But always know that there are 99% chance of failure there and 1% chance of success. You have to get really, really lucky. I think I got lucky, and of course, put in effort, but really got lucky as well.
Okay.
Yeah, so that is what.
No, thank you, Varun. And when you talked about failures, right? And you said 99% failure rate is there in many things, right?
Yeah.
And you have to take that risk.
Yeah.
What's been the biggest failure so far for you that you felt like this didn't work out for me? Anything?
So, yeah, it's an interesting question, but honestly, I don't ponder much on it. If you ask me, my biggest failure, I honestly don't like. Maybe could have done well historically somewhere, but I don't. It's always just move on, right? Like
Right.
I look at, so we are basically, we believe we are entrepreneurs, and we are always moving on to solving the next problem, and trying to make it big, trying to scale, trying to grow as much as possible, try to solve for our customers. So I don't ponder much on the wins and successes and the losses.
Right.
And this is the biggest complaint which my wife has with me, that
Right.
you don't stop to celebrate, you do not stop to
Okay.
feel the pain.
Right.
And yeah, it's just a fun journey.
That's
Yeah,
a very
it's
good
the
spirit, actually. Just
yeah
keep moving.
the fun is in the journey. Yeah,
Right. Okay. No, brilliant. Thank you.
Yeah.
With that, let me move to the rapid fire.
yeah, sure.
I'll ask you quick, rapid questions, and I want to get your instant reaction.
Okay, sure.
Okay.
I'll try my best.
Of course. Most overrated theme or sector in India as of now?
Commodities, people are chasing the trend.
Hmm.
We have to be careful because the volatility can be very high.
Okay.
Yeah.
And commodities means gold and
Largely
silver,
silver.
largely.
Largely silver.
Silver.
Gold is still lesser volatile.
Yeah.
And more, more safer than silver, because it has a lot of safe haven attached to it.
Right.
The things in silver which you're talking about now were nothing new, right? We knew it this 1 year back as well, but there is a rally, and when the rally has been rally was okay till it was 100%, but now it is at almost 300%, right? So it has.
It's corrected today, by the way. So.
Oh, is it? Okay.
Yeah, badly.
I've been on the road, so I couldn't check.
Right.
But it is beyond. Nothing can can just keep going up. So don't chase the momentum, and it is a little overrated right now, more in my opinion.
Okay. Index funds, which is the passive funds, or
Yeah.
the active funds, which is your choice?
No, my choice is purely, so core portfolio is always in active funds,
Mhm.
active diversified equity or hybrid funds,
Mhm.
which is about 70%, and then remaining I play in passive funds. But in passive, I believe investors see, there is a, what I believe is that in India there is enough opportunity to create alpha. Right, and you should select those funds where you believe there can be an alpha opportunity. And for thematic investment, like the way we talked about, you can select passive schemes. So thematic mutual funds do not make much sense to me, but diversified equity, diversified hybrid funds makes a lot of sense to me.
Right. Okay. One golden rule of investing that everybody should follow as per you.
Do the right asset allocation.
Hmm.
Right. For example, I have met investors who are 100% in equity, met investors who are 100% gold, and people. See, there are investors who come and say, "Oh my God, I should have sold everything in equity and invested in gold 1 year back." That's not the way you will create wealth, right? That is trading, right? Up short time you will create wealth, but your chances of going wrong are always there, right? Your job is to remain steady towards your goal, do the right asset allocation, and that will help you create wealth, right? Like if you XIRR of 20% is not bad, so don't try to make it 45, 50%, right? Be happy with the decent XIRR. It's quite good.
Worst investing mistake people make?
Chase returns.
Chase returns.
Yeah,
Absolutely.
it's looking at the rear view mirror, looking in hindsight and saying, "Oh, this has happened. I should continue this," and going all in. right? You should always diversify. You should always do right asset allocation. If there is a momentum you want to chase, do it slowly, right? So do be disciplined about investing. And again, sometimes I believe people should consult an advisor. Actually, many times I believe people should consult an advisor, and because you are not equipped to, sometimes you're not equipped to know how do you want to invest, in a difficult market.
Right, right.
Yeah.
Next one, when is the big money made? Is it in the bull run or bear run?
So big money is made in investing in bear run, and then waiting when
Waiting
the
in the
bull
bull
run will.
run.
Yeah,
Okay,
yeah.
I see.
You can't just wait for the bull run and invest at the time of bull run, because then you will be worried about what the principles are. Like, people who are making money right now are ones who have invested in silver about 1 year back or 6 months back, right? Who are following the asset allocation, or invested in gold, right? Now we believe is the right time for equities, especially actually small cap equities, right? So we launched a small cap fund recently with the same thought process, right? And we realized that people are so negative about it, and I am sure that 5 years down the line we'll be sitting and saying, oh, we should have invested in small cap fund then.
Right, right. Gold in 2026, by the end of 2026, what do you think? Is it a bull scenario from here on or bearish scenario?
Well, that's a very speculative and difficult question to answer. uh, See, there are a lot of fundamental reasons why gold has moved, right? There is geopolitical tension. It's a safe haven. Central banks buy gold. There's de-dollarization which is happening. So countries are loading onto gold. So it is a still a decent investment opportunity. In our multi-asset fund, we have still have a decent allocation in gold, right? So gold, I believe, is good for your portfolio, but right now it's at very elevated levels. Don't, if you want to enter, don't just enter in a lump sum way. Face it out.
Mhm.
But gold is always a good opportunity because volatility in gold is not very very high. Like, it is manageable, right? It's not like silver where it can correct like 20-30%. How much it is corrected by today?
I think ETFs has crashed today 20% or something.
So it has the possibility to crash by 20-30%.
Silver in 2026, I know you answered it partly, but still I want to know silver in
See, silver
2026.
is very volatile asset. See, there are two things why silver also has a lot of industrial usage in EV, in solar panels and renewable energy, and so on and so forth. But and also it is now safe haven. But right now, I believe it is very speculative. Right? There is a lot of money which is chasing the momentum. There's a lot of margin money which has started coming in silver. When that happens, then it can just create vicious cycle.
Right.
Once silver goes down, margin calls start happening, and then silver will keep going down. So you don't really know. Silver is a trading commodity right now. There, 1 year back, if you would ask me the time when we launched silver ETF in May, we launched it at 97, 98 NAV. That is at some 340 right now. Right? So that time, when we launched, we were very comfortable with silver. And that is the reason why we launched it, right? I was still comfortable when it hit 180, right? It came down to 140, we were still comfortable, right? I'm talking about the ETF prices. We still had a good exposure in our MAF fund. When it crossed 250, that is when we have started trimming the position a little bit. And right now, I wouldn't say, I don't know what will happen to silver, but it is in a speculative zone as per me.
Right. One book on investing that everyone should read.
Uh, See, it's a very difficult question actually, because there are many books, and there are simple books. Also, the book which I like the most, or which I have been reading. So I unfortunately, because of my travels, I don't get much time to read. But I like to read biographies, right? Autobiographies or biographies. Right now, I'm reading about Dipender Goyal and how he has created Zomato. Very interesting book. There is a Changing World Order by Ray Dalio. That is a very interesting book, very relevant for recent times.
Mhm.
Because he is predicting that US will not grow or might crash, and what is the reasoning behind it. So I try to understand how people think, what has been their journey. So that is my personal preference. I On investing, I don't read purely investing philosophy, because I like to develop my own understanding. I think the markets fundamentals remain the same, but like markets keep on changing. So you have to understand the philosophy, and then apply that philosophy in the way you understand
Brilliant. If you were to go out on dinner with a celebrity, who would that be and why?
it. Yeah, I'm very keen. Unfortunately, that person is no more now. I passed away in 2024, but there was this guy named Jim Simmons.
Hmm.
Not sure if you heard of it. He was a quant investor.
Yeah, absolutely. I've
Yeah,
heard about him. So
yeah.
I actually did a podcast with Sandeep Tandon from Quant AMC.
Yeah,
And Sandeep also mentioned Jim Simons, and
yeah.
because of the scientific way or the data
Scientific
that
way.
he looks at,
Yeah,
behind any decisions that people
yeah,
make. So
yeah. See, so what I believe is, investing stock selection is more art than science, right? It is, but he has been able to use science and been able to capture that kind of art to do well, right? He was not just a trader; he was also a good investor. He was a good hedge fund investor. So I'd love to learn from it how he thought about it. I'm an engineer at heart, right? So I'm a mathematician at heart.
right.
So I would love to know, and with the changing world order, with the way things are changing, how can we apply that? Like, one of the philosophy we run in Groww AMC is a quant based. We call it Shastra. Strategic and holistic asset allocation and technical risk assessment. So our hybrid funds are based on that, and funds are doing well. So we want to expand it more. One of the you might be aware, in Groww AMC we have raised funding from SSG, which is State Street Group. It's yet to get finalized, pending approval from regulators, but that is also very big in a very big quant house. So all of this are like exciting, and I would have loved to discuss that with Jim Simmons if he was
Of
alive.
course.
Yeah.
That's very sad. One advice that you will give to yourself if you were 18 years old now.
Oh, wow. Okay, 18 years old, I was entering college. Um, I think I would have said, I was very serious always. I was always working very hard and,
Right.
trying to.
Good boy.
Yeah, not necessarily a good boy, but I came from a very small town. I'm from Ujjain.
Right.
And I got into IIT Madras, and that changed the path of my, trajectory of my career. And I worked very hard in college to understand how people think, and, to multiple positions of responsibilities, and, and a lot of that helped me, but I think I would have asked to probably take it more easy, relax, because it all turned out to be happy. So I would have probably said to enjoy a bit more.
Nice. Last one for you, Varun.
Yeah.
Who should be my next guest that you would like to watch and listen to?
Oh, very interesting.
I mean, they may come or they may not come. They may say no to me,
Yeah.
but at least I'll try, reach out to them.
Maybe Donald Trump, if you can get him. Let's understand what he's trying to do. What he has created a lot of turbulence in the in the world. So
I know a lot of people are behind him
yeah,
to catch him, but of course he's
and
far
it's,
beyond my reach, definitely.
looks like such a dogmatic approach to maintaining world order. Yeah, so it's
He's not maintaining it, is he?
yeah,
He's
like
actually created a lot of chaos for so many economies and bodies. So
yeah.
Varunji, thank you so much. I think
Yeah,
I found it really insightful. The themes that you spoke about gave me a fresh perspective, and the structure and the tailwinds behind these themes is quite important. So I'm definitely going to explore some of these things. And
Sure.
once again, thank you so much for your time.
Thank you so much for your time. It's a pleasure.
Thank you.